This is my partner,
Jerilyn Martirias,
and we're glad to be here with you today to discuss about Chapter 10, which is CSR reporting seen from an ethical perspective
and Empirical investigation.
And now, let's get started!
Abstract. The purpose of this chapter is to define the current practice within the reporting of CSR that provides proper information that allows stakeholders to evaluate the commitment of CSR in companies.
Introduction. None of the 250 biggest businesses in America were discovered to have annually released social and environmental reports as 2001. However, the majority of large corporations now publish annual reports on their commitment to CSR, in contrast to the 1990s when it was only the idealistic few who practiced CSR reporting.
We discovered that one cardinal and three different ordinal methods are pertinent to our inquiry. Thus, on that basis, we come up with the following four hypotheses. The first hypothesis is the current practice of CSR reporting does not enable stakeholders to evaluate the CSR performance of companies.
Second hypothesis. The current practice of CSR reporting does not enable stakeholders to evaluate whether a company's CSR performance is better or worse compared to last year.
The third hypothesis. The way CSR reporting is currently done prevents stakeholders from comparing the CSR accomplishments of businesses across various industries.
Fourth hypothesis. The way CSR reporting is currently done prevents stakeholders from comparing the CSR accomplishments of businesses operating in the same industry.
The companies. The selection of the companies for this study was primarily motivated by the fact that they are the biggest and the most businesses on earth, making use Forbes or the world's biggest public companies list, or based on the company's position for sales, earnings, and market capitalization. As a starting point, we selected the three largest, or in terms of the assets and market value.
These are the chosen companies that Kloster Fredrickson and Martin Ebbe Joule Nielsen chooses. In computer hardware, the first company example is Apple iOS. Apple Incorporation is an American multinational technology company that specializes in consumer electronics, software, and online services headquartered in Cupertino, California, United States. Apple is the largest technology company and is the world's biggest company and the fourth largest personal computer vendor by the unit sales and second largest mobile phone manufacturer.
The second biggest computer hardware company is Hewlett-Packard, or also known as HP Incorporation. It is an information technology company best known for its personal computers and printers. The current company was formed in 2015 after the original Hewlett-Packard company split its personal computer and printer divisions and its enterprise product and business services divisions.
The third biggest computer hardware company is Dell. Dell is an American technology company that develops, sells, repairs, and supports computers and related products and services and is owned by its parent company, Dell Technologies.
The first biggest food processing company is Nestlé. It is a Swiss multinational food and drink processing conglomerate corporation headquartered in Vevey and Switzerland. It is the largest publicly held food company in the world, measured by revenue and other metrics since 2014.
The second biggest food processing company is Unilever. Unilever is a British multinational consumer goods company with headquarters in London. Unilever products include food, condiments, ice cream, cleaning agents, beauty products, and personal care. Unilever is the largest producer of soap in the world, and its products are available around 190 countries.
The first biggest oil and gas operations company is ExxonMobil. ExxonMobil Corporation is an American multinational oil and gas corporation headquartered in Irving, Texas. It is the largest direct descendant of John D. Rockefeller's Standard Oil and was formed on November 30, 1999 by the merger of Exxon and Mobil.
The second biggest oil and gas operation company is PetroChina. PetroChina is a subsidiary of China National Petroleum Corporation, is an oil and gas company. It explores for and develops and produces crude oil and natural gas, refines crude oil and petroleum products, and produces and sells basic and derivative chemical products and others. The third biggest oil and gas operation company is Royal Dutch Shell, or usually just called Shell. Is one of the biggest companies in the world and has made huge profits from its exploitation of oil, gas, and other fossil fuels. Founded in 1907 with the merger of Royal Dutch Petroleum Company and their Shell Transport and Trading Company.
Several things are important to note. The first is we use the CSR reports published in 2013 or for the 2012 fiscal year from all of the companies except Kraft Foods, which was not able to present a report for 2012 by our deadline, or which we had set as 1st of July 2013. Second, even though many of the reports are not titled as CSR reports or C reference list, they all concern a variety of traditional CSR-related issues, including worker health and safety and environmental impact.
The overview of findings. We coded the data utilizing our assessment methodology, which is discussed in Chapter 12 in the evaluation framework, is divided into the four following categories. First is upholding absolute constraints against certain harmful actions.
Second, minimizing negative impact. It is the negative impact on the affected employee and protecting morale in workplace is to ensure separated employees at every level are treated with dignity and respect in the process.
Third is contributing positively to society. Contributing to society means to participate in community and self-development activities.
The fourth is commitments and partnerships. After partners agree on the value of the partnership, secure commitment from all of the partners. This can be formal, such as asking all partners to sign an agreement, or it can be more informal or smaller in scope. Informal commitments are built on individual relationships.
There are three things are worth noticing. First, all of the companies seem to support absolute constraints against certain harmful actions.
Second, most actions that the companies believe to be absolutely morally unacceptable are human rights violations. Third, this category does not take up much space in the company's CSR reports.
In minimizing negative impact, two things are especially worth noticing. First is the companies present a lot of data that is captured by this category and etc. Big data is a term that describes large, hard-to-manage volumes of data, both structured and unstructured, that inundate businesses on a day-to-day basis. Second is
In relation to minimizing negative impact, CSR reports focuses mainly on four areas. First, workers' health and safety. Second, the use of scarce, life-essential resources, including reducing the use of fresh water. Third, resourcing and/or production of raw materials. Fourth is pollution.
In contributing positively to society, focus on a wide variety of different areas. There are 6 areas that illustrate the nature of the companies CSR reporting within this category. The first category is job creation, second, tax payment, third, engaging in or donating, fourth, promoting diversity, and fifth, securing access to their product, lastly, sector specific.
Evaluating the hypothesis. First, evaluating hypothesis 1. Companies do not present and defend any clear baselines on minimizing their negative impact. For example, the Apple Supplier Code of Conduct is based on standards created by the international organization, the United States, and the Electronic Industry Citizenship Coalition. To make sure suppliers adhere to the code, we have an aggressive compliance program that includes factory audits and corrective action plans. Apple found that 21% of its suppliers did not comply with its code with respect to discrimination. 34 facilities required pregnancy testing and 25 facilities conducted medical testing such as hepatitis B tests. CSR data presented by companies is difficult to evaluate when it comes to the question of minimizing negative impact. For instance, it is unclear how many tons of CO2 or waste it is acceptable for a given company to produce, and the companies do not endeavor to put forward any such baselines themselves. Our goal is to have zero facilities and no leaks or other incidents that harm our employees, constructors, our neighbors, or put our facilities and the environment at risk. In 2001, we recorded low injury rates, but any injury or incident, no matter how small, or serves as a reminder of the need to avoid compliance. The goal is to have zero incidents in which employees are harmed does not seem clear. The question is, how many injuries are acceptable, and more importantly, at what price? It is also important to note that companies should also justify or at least try to explain why specific baselines are reasonable. We are not claiming that all baselines need to be explicitly justified or explained. The problem is that, for the most part, relevant baselines are unclear and not explained or justified. This leads us to conclude that the current practice within CSR reporting does not enable stakeholders to evaluate a company's CSR performance. CSR is the effort to minimize a company's negative impact in relation to workers' safety and the use of natural resources and pollution. Hypothesis 1 is plausible because the current practice within CSR does not enable stakeholders to evaluate a company's CSR reports seen from an ethical perspective. Many companies simply present more or less irrelevant case stories, and those who do not present some relevant data fail to provide a comprehensive overview of how these sources are spent.
Evaluating hypothesis 2. We are not able to evaluate a company's CSR performance on the basis of a single report, but we can evaluate whether it has done better or worse than last year. The problem with this kind of agreement is that we are not necessarily able to compare one set of data with another. Evaluating hypothesis 3. CSR reports of companies from different sectors focus on very different issues. Food production companies focus on the nutrition value of their product. Oil and gas firms focus on a clean or sustainable energy. Comparing a company's CSR performance this year with last year is an even bigger problem.
Evaluating hypothesis 4. Two issues stand out as particularly troubling. First, the CSR reports of businesses from various industries concentrate on various topics. Second, even if businesses from other industries decided to concentrate more on the same problems, there would still be problem. In evaluating hypothesis 4, we came to the conclusion that stakeholders cannot compare the CSR performance of businesses operating in similar industries under the present CSR reporting practices. Conclusion: CSR reporting is characterized by cherry-picking data, meaning that some companies do not provide near all the relevant data. The relevant ethical baselines for both the minimizing or negative impact and the positive contribution categories are unclear and lack justification or are, at least, unexplained.
And that's all for today. Thank you for watching.